Turgel, co-founder of InsurTech Denver, along with Mark Wheeler. Mark, please kick us off.
Hey, good afternoon, everyone, and welcome to InsurTech Denver, our webinar on the ins and outs of cannabis and insurance. I'm Mark Wheeler, as Daniel said, co-founder of InsurTech. And we are continuing our webinar series, and are very excited to have assembled an amazing panel of experts from the cannabis industry on this auspicious day of 420. But before we jump into the session, just a couple of things from a housekeeping standpoint. Please make sure you're on mute so we don't have any distractions there. Use the chat and question function to share any of your comments and questions for the panelists. We'll try and weave those questions in as we can, but we're going to try and save time at the end, if we have it, to get your questions answered. Also, open up your calendars. We have 2 upcoming events. Next month, we have a webinar on women in insurance. We've been able to assemble a great panel of female leaders from the insurance industry who will be sharing their insights and experience in working in insurance. And then in early June, we will be having an in-person event, yay, finally, an opportunity to meet with your industry colleagues, to have a beverage, relax, share stories around that. So look for a save the date email from us. And then also, if you haven't connected to us via LinkedIn, please do that. We'd love to have you as a follower, and check out the website as well. Now for our topic today, the United States cannabis market is valued, depending on who you look at, between 60 and 70 billion. So I can be corrected on that. Represented in 33 states. Similar to insurance, it's regulated on a state-by-state basis, which drives us all crazy. And it touches all aspects of insurance, including agriculture, traditional commercial, licensing, testing, manufacturing, retail, product liability, personal, and especially compliance. So it's amazing that we are talking about this topic today. And with that, I'd like to turn it over to Daniel and the team.
Thank you, Mark. Like I said, Daniel Turgel here. I'm our moderator, and I'd like to take this first section of the panel to introduce each panelist. Please, one by one, 1 to 2 minute quick intro, you, your company, and your role / history in cannabis insurance. Let's start with Peg Brown. Peg, over to you.
Hi, welcome. My name's Peg Brown. I'm Deputy Insurance Commissioner for the state of Colorado, focusing on property casualty and administration. And part of my portfolio is to encourage insurance coverage, commercial insurance coverage for cannabis businesses. So we are very interested in encouraging insurance coverage and predominantly focused on getting admitted insurance coverage into the state of Colorado for the Colorado cannabis businesses. We know that there's a wide variety of insurance coverage options, but they tend to be in the excess or surplus market right now. And we'd like to see more admitted carriers coming in.
Great, thank you so much. And over to Gerry Jones, CEO of the Cannabis Insurance Company. Gerry.
Well, thank you. Hi, everybody. I'm Gerry Jones. I am the CEO of the Cannabis Insurance Company. We're an MGA in this space, and we focus solely on cannabis and hemp, or marijuana and hemp, as the case may be. We write in 48 states today, but focus on the adult retail market typically. Based in Denver, and we started back when it all started and became legalized here, and then we've grown from there. So looking forward to today's event.
Thank you very much for being with us. Over to Chris DiDonato, Vice President at Holmes Murphy. Chris.
Hi, good to be with you guys today. My name is Chris DiDonato. I'm the Vice President of Property Casualty Sales for the Denver office of Holmes Murphy and Associates. Holmes Murphy is a 90-year-old firm. We're the largest employee-owned insurance broker in the country, something that we're really proud of. Our office here in Denver is about 50 folks, and we're about 1,100 around the country. I have written cannabis almost since its inception with medically legal cannabis back in 2000, but I had a long break in between that time while I was working for a bank-owned insurance brokerage, and it was strictly hands-off. So I've only recently come back into the space. While we don't have a specialty cannabis practice, we're seeing this opportunity emerge around the country, especially in a lot of our Midwest offices where we're starting to see positive legislation. And so it's an exciting place to be. I'm excited to share a little bit about our experience and hear from the rest of our panelists.
Thank you very much. And over to Sam Boettcher, the Senior Customer Success Manager at Embroker. Sam.
Hi, everyone. Nice to have you here. I am Sam Boettcher. I am a Senior Customer Success Manager, Account Executive, and Broker for Embroker Insurance Services. I have a 20-year commercial background in insurance, and I am in my 5th year as a cannabis specialist. I am currently 100% cannabis and hemp, marijuana and hemp. We do it all the time. And I am solely focused on the growth and the technology placement that we are looking forward to in future years. And once legalization happens, we're hoping this is going to be a big boom for us.
Thank you, Sam. As you can see, we have incredible representation from across the industry: regulatory, distribution, underwriting, claims, on and on it goes. Exactly the type of panel that we like to have here. So thank you all again for joining us. This is going to be great. Okay, first question, I'm going to stay with Sam. Is it too late to enter the cannabis insurance industry or sub-industry, either from marketing, timing, regulatory, customer relationships? Where are you on this? What do you think for those of our viewers who are, thinking about entering? What do you think?
It's always a good time to enter the space. Colorado is consistently growing. The number of growers and retailers is still being applied for every day. So we're not going to see a downturn in potential customers. From a carrier perspective, absolutely. It is. We have a very strong need for carrier involvement and for the admitted markets, especially as PEG has led to get into this space and to start taking care of the clients and the industry on a whole in Colorado.
Okay, thank you. Let me go over to Gerry now. Gerry, from the underwriting MGA side, how do you feel? What are your thoughts? You've been in this industry for a while now. You're probably seeing or have seen competitors come and go. Where are you on it in terms of timing?
Obviously we're bullish on the industry, and what we've seen in the last, I'll call it 5 years, is more and more options. We constantly used to hear there's no real good insurance for the industry. I think that's changed dramatically in the last 3 or 4 years for sure. We have now, all granted, it's surplus lines, and but they had the ability to change and modify coverages pretty quickly. So we feel pretty good about that. We see capacity increasing. We also see claims on the rise of late. So that maybe gets some pushback from people who want to get into it from the carrier side now. But as the markets mature, particularly out west and then kind of rolling to the east, we're now starting to see winners and losers, consolidation happening. Best practices are starting to come to fruition, which is nice to see. And in the insurance space, I always kind of considered us we're kind of like the referees for the industry. If you can run a good business and stay insured and stay around, and we're to help them do that. So yeah, it's always a good time to get into the space. It's interesting. Colorado has around 4,000 total licenses today active. We don't see any new ones coming out, but we also see people using those licenses to those who want to get out of it. Maybe they got the license initially as an investment. And so now's the time to kind of, I would say the hard learning's been done. And so now's a good time to get involved.
What do you, just staying with you for one moment, can you qualify what you mean by the hard learning? Is that underwriting limits? Is that certain red flags? What do you mean by that?
Yeah, so initially, the first operators in the space, and I'll just focus on the grow side for now. The grows were of all types of varieties and shapes. The confusion between what was the best kind of weed to grow outdoors versus indoors, those types of questions have been answered. The types of facilities that were initially started were all over the board. Now we're starting to see them become more industrialized, if you will. Lots of learning from fires and risk. We've seen the transition from incandescent bulbs to LEDs, from high intensity lights. We still have some challenges on inspections from an electrical standpoint, and a little bit of a plumbing stuff as well. It takes a lot of water to grow fine flower. And so sometimes people were, well, let's just say, using their own creativity and how we got the electricity in, how we got the water in. But since then, again, I would say in the last couple of years, much more sophistication. The science involved has gotten better. And on the insurance and the underwriting side, we've also helped them kind of push towards best practices and risk limitations. So we've gotten smarter. I think the industry's gotten smarter. I will say, though, each time we open a new state, it's Groundhog Day. They tend not to want to hear what we've learned along the way. The old joke is, y'all don't know my constituency. So, but eventually they kind of come back around and are more open. But every state's different. And so that's the hard part of our job, is understanding those nuances and then recreating the wheel yet once again. So
And
I
if
see a
could
lot of
jump in,
smiles. So
Go ahead, please.
a couple things that we on the insurance regulatory side see. I'm the vice chair of the National Association of Insurance Commissioners Cannabis Working Group. It's chaired by California. So we have California, Colorado, Washington, Oregon, and as you said, it rolls east. But a couple things that the Cannabis Task Force has found is, one, the connection between the reinsurance as the primary market, or not reinsurance, but the surplus lines market as the primary market, consolidation that is happening among the cannabis industry, which allows them to utilize the surplus lines market more. And we're trying to encourage the admitted carriers to come in to provide a market for the smaller entities, which may not be able to access the surplus lines market. Gerry, can you comment on that at all?
no, I guess I maybe I misunderstand the question a little bit. I think it was easier actually for the smaller entities to get coverage, and at frankly prices that haven't gone up in 3 years. We're starting to see some upward mobility now in the price on the premium volume. Again, based on a lot of the learnings that we've done and justifications, but it was initially harder for the bigger guys, right, who had the higher TIVs to be able to get complete coverage, as well as liability coverages across the different segments. And that's where I think maybe people think about the admitted market is you'll get this kind of blanket coverage across all the segments. And that's an area where I think the surplus lines, different carriers have different strengths. And so it's incumbent upon us to actually it's challenging for us to understand that and then share that information and train it to an agent who may or may not have a lot of cannabis opportunities. When I mention all those licenses, there's double that many PNC agents just in Colorado. So it's a business that we don't see. We see some experts kind of from the retailer side getting better and better at it. But typically it started out with, hey, my friend's in the business. And so I'm an insurance agent and we play golf. And so I'm going to cover their business, and they don't really understand the cannabis complexity. And that takes a little bit more time to understand. And so you can provide the right kind of coverages. So long-winded way to answer your question, I hope. But
well, thank you. And I'd like to ask Chris the same question, because Chris, based on your original experience now at Holmes Murphy, how would you answer that, right? What is the balance between admitted and non-admitted, and also small versus large insured getting coverage? And also those asking questions, we're going to get to those. Thanks. Keep them coming. Chris, how do you see the industry?
Well, I mean, clearly we have a big need for the Peg Browns of the world. We need that help. So I commend her for her efforts, and I think it's going to be, I mean, we're close, right? There's federal legislation around the corner that I think is coming up for votes in August. I think it's murky as to whether that passes this go around, but I think we're within 2 to 4 years of passing some type of federal legislation, I would hope. Because at this point, who are we fooling? It's not stopping at the state level. So, let's make something happen. But, capacity is the issue. Gerry hit on it. We need more capacity. We need more carriers in the market. And when you get into the larger, more sophisticated operators, and you have large schedules, large TIVs, we're having to go out and find multiple carriers and layer up to the limits that they need. If we can find solutions around that, it's going to be a win for everyone, whether it's the operators themselves, us in the insurance industry. From a regulatory standpoint, I think it just makes the whole cannabis industry cleaner if we can get folks like Peg some success in growing in that space. To your question around small versus large, I think the problem is the same on both sides. Gerry hit on it. I think some of these smaller operators are easier to find cover than the large aggregated or, M&A targeted type of accounts that are looking for these large SOV, TIV solutions, and they're in multiple states. That gets challenging, no question. And it's our job collectively to try to find the right solutions.
Okay, let's stay with you, Chris. Another question. What are the 3 things as an agent that you think about when you get, and you can, if it's different between a small and a large account, surely you can pick one or tell us the differences, but what are those first 3 things that you think about when you see a cannabis account come across your desk?
Well, I think for anyone that's in this space, you don't have to be an expert, but you better bring an expert to the table. You don't want to go in and be outshined by the Sam Boettchers of the world, and that's all they do. You have to know this stuff, or you have to bring somebody into the picture that knows it. So carriers that we partner with, or MGAs that we partner with, have a ton of resources. You've got to lean into those. I think that's the number one lesson that we've learned, is utilize the resources that are available to you. The second piece would be that it's a rapidly changing market. You have to be a student of your client's business. You really have to understand the business, the regulatory environment, and you have to be up to date on this stuff because it changes so quickly. A lot of new carriers coming in and out of the market. And with all the M&A activity, it creates great opportunity, but it also creates incredible risk, not just for your clients, but for you as the broker. So, again, being a student of your client's business, I think, is critical. You really need to have very frank and candid conversations with what their long-term strategies, growth plans are. Nothing is worse than being caught flat-footed on a cannabis account and trying to find a solution that you needed a week ago. I think, Gerry and Sam could probably speak to that as well.
Well, then let's go to Sam. Sam, how about you? What are the top 3 things that come to your mind on your accounts?
So the big one is definitely understanding what your clients are doing. That directly ties into the fact that a lot of our insureds, a lot of the agents, brokers, and even some of the company people that I've dealt with over the years do not fully understand the policy forms. They do not fully understand the exclusions and the client's responsibility to make sure that they're following those policy restrictions. To the biggest headaches I have right now on the property casualty side are health hazard exclusions and protective safeguard endorsements. If you don't lock your stuff up, it's not covered. So we run into how well do you know your client and how well do you know your policy? That's probably the two biggest ones. The other one is just understanding where your marketplace is going. If you have auxiliary lines, don't assume that someone other than Progressive is going to be able to write that auto for you, or that you're going to get a bond for a license for a lab somewhere in 24 hours. It's just your expectations of timing and your expectations of your involvement and how much work goes into it needs to be realistic.
Okay, let's talk realism for a minute, because I'm going to loop in a couple of these questions as we continue to go through this. The first question is about licensing in Colorado. That's for Peg. And then the second related question is about size of market. And that relates to what Chris was saying, and Sam, what you were saying. Not just, the question was about the size of the market in terms of dollars or premiums, but I also want to know people. How many people are there? How many brokers are we talking about that are placing business? First, let's start with licensing, and then we'll come to the marketplace. Peg, can you tell us what's going on? I know there's only so much you can actually tell us, but of what you're able to tell us, is anybody applying? Are you succeeding in your mission here? And what are you finding along the way?
We do have carriers that are covering cannabis risk. A lot of them heretofore have been in particular areas, workers' compensation for people in cannabis retail. That we can get. That's out there in the marketplace. There's some auto that's available. There are other challenges. Colorado has approved the AAIS Cannabop form.
Yep.
And, we have hung our hat that, we've approved that. And if carriers want to pick it up, more power to them. We've also looked at the ISO and what they're doing. We have had some carriers file rates and forms with us. And I believe they have been approved because Colorado's file and use. But we need more. Right now we're still at a very minimal level. And I talk with my colleagues across the country and ask how many admitted carriers they have in their states. And outside of California, it's pretty sparse. California is just such a large market that they can drive. But I really wish some of the carriers in California in the admitted market would join in Colorado admitted market.
Well, they'll certainly find a friendly marketplace here, as we heard from another panelist, Gerry, about how good Colorado is. We'll come back to that. Let's talk about market size for a minute, both in terms of premiums or total insured values, however you want to say it. Sam, how big is it to you, and how many people also? How many brokers? How many agents? How many MGAs? Can you give us a sense of how big the market is?
For Colorado specifically, we're looking at, almost every MGA that I have dealt with has a cannabis person or someone that works on cannabis now as kind of a rule of thumb. They know it's a good bread and butter opportunity. Not all the MGAs have the specialty, but I'm personally aware of at least 30 MGAs nationwide that are really targeting the cannabis sector and the hemp sector. Some of them hemp more than others, but it's an ever-growing need that they're recognizing. As far as book size, we're looking at just in 2021 alone, we're looking at, $30 to $40 million in new revenue just in growth. That's not existing revenue. That's not people that have come into the marketplace prior years. So, if we're looking at 2 or 3x over a year, just because claims are going to drive premium up, company sizes, Chris was leading to, the mergers and acquisitions and the large MSOs are going to start playing more in Colorado because they're going to start eating everyone else up. The numbers are growing. And again, it's claims and premium driven partially, but it's also that the market is demanding the extra limits and the higher coverages and more coverage.
Okay, I want to stay with the same question. Thank you, Sam, for both Chris and Gerry, because ultimately it is a competitive market, and we're very interested in how it's growing, how big it's growing, how quickly it's growing. If it's a 60 to 70 or $100 billion industry, and you figure a few percent going to insurance like other industries, right? So it could be a massive multi-billion dollar overall market. Or if not now, very quickly, right, with such high combined growth rates. So Gerry, over to you first, and then we'll go to Chris. Gerry, how big is the market? Sam just said 30 MGAs. You're obviously a leading MGA. How many competitors do you have?
I would say realistic competitors for us, and just MGA to MGA. And by the way, we're all friends. We all started at the same time.
Yeah.
So I'm best friends with Patrick, and I'm best friends with Charlie and all the gang. And we, in fact, share risk often back and forth, saying, hey, you guys may handle this one a little bit better. And so there's this underlying, while we compete, we're also buddies, because it's a small ship at the end of the day. So I would say there's 5 to 10 regular folks that we run across on a basis, but we, like everybody thinks, they're a little bit better. In terms of real numbers, I like to give that to people all the time. I think the value is giving what the business looks like. In Colorado, if you have a $2 billion industry, give or take, and then in insurance should be 1 to 2% of that. So you're looking at $20 to $40 million in premium in the state. I will say this, the industry is vastly underinsured. And I don't say that as a guy who makes a living selling this stuff. I say it as just the nature of the business. And to get back and what you need to know, you need to understand how hard it is for these guys to stay in business and how hard it is what they do. The regulatory tax side of it is out of control. And until we get a change in that aspect, we are talking single digit profit margins almost on any of them. So when you're dealing with that, they have to look at ways to cut costs. They kind of don't. I don't know that any of them are hardly, actually maybe 5 or 6 that I know out of the 1,000 that we have are fully insured. They try to cut here or there, squeeze stuff, just trying to make it meet until we get some help on the regulatory side from Congress, as we've alluded to earlier. Also, for an agent, you're covering 4 different businesses at once, and that's why it's a kind of a challenge in that you have agricultural, so you have to understand what it's like to grow something. You have transportation, how we move it. You have retail, customer-facing operations, and you have manufacturing where they're making edibles and and the like, all of which are often the same person. And so as a carrier and as an agent, you have to be able to be pretty smart in terms of understanding that business. And I would ask, quickly get over the giggles. When the first time you walk into a 25,000, 100,000 square foot grow, get that out of the way and then go from there. Just, it's a business and it's a challenge for these guys. So they need to have good partnerships all across their supply chain, and that includes insurance.
Integrated businesses, though, they lead the way. I know it's been mentioned already that, we've learned a lot, I think by you, Gerry, about, how to insure and what to look for. But they also can pioneer new safety as we learn more about specific fire and other risks for each business. Over to Chris. Chris, how do you see the market? I know you're here in Colorado as well. Do you have a sense of the national market as well? What are you seeing?
No, I wouldn't claim to know the overall numbers. I think conservatively, it's estimated that the market today is north of $30 billion and growing. But I would just share experience from an agent side as a broker that doesn't necessarily specialize in cannabis, but we do tend to look upstream, and we're very opportunistic on those that we do chase. the handful of accounts that we write today are among some of the largest accounts that we write in our office, and that's across construction, manufacturing, transportation. So there are opportunities here, but to Gary's point, they are underinsured. These guys have been in a risky business, many of them, for the last 20 years. So, why go spend more on insurance on something that's been a little cloudy and murky for a long time? They have a different perception of risk. And I think that's a challenge. It's also an opportunity that you can overcome with these clients when you try to build in the value of risk management is not just the purchase of insurance. It's everything else that comes in conjunction with it, around really smart loss control, really good claims handling. I mean, there are ways to build that story for your clients. I think that is really compelling. Gary also mentioned the operation cycle for these guys, from the growing to the retail to extraction to delivery at this point. You have to contemplate a lot of risk, and these companies are very sophisticated, and they have expectations that you're going to meet the sophistication of their operations. So there are some really unique opportunities out there. One that's an example is from a delivery standpoint, the integration of telematics into delivery vehicles, et cetera. I think just one example of how this industry is sort of emerging and growing. And despite all that's happened in the last 20 years just in Colorado in this space, this is still a growth industry and an immature industry. So the more of those new solutions we can put out on the table, I think I think our clients are likely to be fast adopters of this because they don't know really anything else, and they're eager to find the right solutions. They're eager to squeeze their margins. And again, we're responsible to go out and garner those solutions on their behalf.
I'm going to stay with this theme of the integrated and complex operation back to Peg for a minute. Is that the problem? Is that one of the problems that, despite having a cannabis product from AIS, you mentioned earlier how siloed some of the filings have been. Do you think that the complexity of the operation is holding back some of the markets that are needed? What do you think?
I think there are two reasons that we're seeing, a reticence. First, obviously, is federal status. And we really do need to have Congress enact legislation, whether it's the Safe Banking Act or the MORE Act or the Claim Act. That is a major barrier to making this a full-fledged insurance market for the industry. And the industry is legal in Colorado, so it deserves to have availability and ways that it can acquire. I would absolutely agree with Gary that taxation issue is huge because the profit margins are so small. One of the tactics that we have tried, and with some success, and I anticipate we'll continue with it, is to try and link up the admitted carriers who provide business insurance generally with the Marijuana Enforcement Division, MED, in Colorado, which regulates marijuana and cannabis, to show them how extensive the regulatory structure is, that compliance with that regulatory structure gives them a base on which to rely for assessing risk. Colorado has probably among the most developed regulatory structures for the marijuana industry. And I know that my colleagues over at MED are consulting with states across the country. As a matter of fact, they've even formed an entity similar to the NAIC that's called CANRA, and it's the Cannabis Regulatory Association. It is for the regulators of cannabis across the country, for them to act very similarly to the NAIC, discuss best practices, try to get more consistency in the regulation of the cannabis industry
Great.
so that it will, because we believe that that will help in all aspects, just have a floor on which people can rely.
That's great to hear. You touched on Canada, the Safe Banking Act. I've been to NAIC meetings before. You see there how much our industry touches every other industry in this country at those meetings. And so it's great. I know, of course, as you said, you're very involved there at the national level. We're coming up on 10 minutes left. I have one more question, which is also very closely related to one of the questions that was entered into the chat, which I'm going to read from there, and then I'll get to the other questions. Thanks, everybody, for your questions. These are great. It's been so interactive. So Robley asks, what is the type and size of business interruption loss you have observed? What about contamination and recall experience? And that's part of this question that I have about claims in general. What are the patterns? Is BI the problem? Is there something on, commercial auto? I heard telematics, right? So that's probably helping on the delivery and trucking side of things. Let's start with Gerry and then go to Sam. Gerry, what's your claims experience? What would you say either about patterns of claims or specifically BI or recall?
So as Pam mentioned earlier, the states do a great job of limiting risk around recall with all the testing that's done there. So we don't see a lot of recall. We've had a couple in Colorado, and early on there wasn't recall insurance. There is now, so those are taken care of. But it's also, it just depends. The product itself lends not to a lot of recalls. It gets used pretty quickly. So on a flower basis, the other claims though tend to follow. It's just the economy. So on a broad brush, on property claims, theft accounted for 36% of them. And then fire, weather related, and water damage all ran in around the 10 to 12% each on those kind of things. Theft was going down for a while. Initially, the theft was happening at the grow sites of things. Then people figured out that was dumb to take plants. Our biggest one that we paid, and we pride ourselves on paying righteous claims, as we like to call them. Was curing harvested plant. Those flowers right before it was ready to go to market, and those tend to be internal for the most part, because they know exactly where to go, what rooms. You can see them on we have cameras everywhere. That's the other thing is regulated in the industry. We force a lot of risk management within the policy itself. And that's but now we're seeing theft kind of coming back up again. Again, some people say it's an economy driven thing. And so we see more break-ins and burglaries at the dispensary level. That's of late. And then again, we're like everybody else, and weather related claims are on their way up as well, especially in the Midwest. The climate change stuff, I read somewhere where there was last quarter, there was $32 billion worth of claims just in the quarter on a regular related. Of that, about 14 of it was covered. So that leads you to think, wow, there's $20 billion of uncovered stuff people have to take care of themselves. So we see that, again, that's kind of going with that. So theft is on the rise a little bit, as well as weather related claims are on the way up again.
And Sam, thank you, Gerry. How about from your perspective, Sam?
I'm actually gonna agree with Gerry on quite a few of those, especially when we talk about uncovered claims. A lot of the more recent theft issues that I'm seeing are not being covered because the clients are not doing what they agreed to do by locking up their material in their safes and vaults like good kids should. So I am seeing some issues as far as here in Colorado and in pretty much every state where employee responsibility and manager accountability are still kind of hiccups in policy form versus client practice. As far as BI losses, I've actually had one of my largest BI losses paid on a crop loss because we had an issue at a facility and we were actually able to get not only their plant coverage, but we're actually able to work through the business interruption income coverage and get them additional partial dollars out of the business income limit. So it's one of those scary things that nobody really wants to kind of look at from an actuarial standpoint on the client side. They don't want to have to go through the BI worksheets. They don't want to have to kind of think about the hard numbers if they have a loss, which is where us as brokers do a lot more hand holding, I think, to make sure that those are adequate to cover those claims. That's a big kind of gap that we see is the limits not being where they need to be, or carriers being at capacity and us not being able to get limits for the larger guys. As far as Colorado specifically, I have had a few active shooter issues, which is one of those coverages that I tend to look at more recently in past years. There's very, very, very few carriers that write it, and it's not cheap. The product recall coverages are still restrictive in form, and again, trying to get it on a monoline basis outside of a package or a property combination type form. It's really still one of the more expensive lines to try to do auxiliary, but a lot of them need it. I will say, as far as the oddball claims, probably the last couple of years they've really gone down, but cyber claims around 2019, 2020 seem to be oddly increasing. This last year I did see fewer and fewer kind of come through the pipeline, but that was one of those auxiliary lines that was just very strange to see a pretty big influx and then just drop all of a sudden.
Okay, thank you, Sam. We're coming up on time. There was one more question I wanted to make sure I asked. If anybody knows on the panel, throw it out there. Is premium financing available? Has anybody seen that?
Yes, there's
95%.
multiple finance companies.
95% of our customer base is premium finance.
Okay.
Absolutely.
Thank you. Okay, that was quick. We'll see if we have time for one more quick one.
Yeah, Gerry, we do financing. Yeah, literally 95%.
Does we talked, Gerry, you mentioned risk management, and Chris too, telematics, Sam as well. Does every single company that you deal with have either a risk manager or at least a risk management booklet, something?
They should, but don't.
Okay, good.
The good
We'll
ones do.
Yeah.
Yeah.
Go ahead. No, go ahead. Go ahead. Finish. Sorry.
Yeah, the ones that are really prepared, the ones that have been in it for a few years and have gone through the growing pains, absolutely. They're going to have a safety guide. They're going to have a manual. They're going to have risk controls in place. Again, Gerry knows and Chris knows, first, second years, you do a little bit more hand holding. You do a little bit more risk control on the front end, so they're ready for it.
Great.
It's I think in most states, as part of their SOP, they have to have it included in their in their licensing. Although we've seen of late, they're starting to refer to it, and I don't know that they did before. It's getting better.
Yeah, I echo the same. If you see, an operator worth their salt, they have a solid quality control program, and they've got someone managing risk and safety.
Great. Okay. We're out of time. We're going to wrap up here. Thanks to everybody for joining us. Thanks to our panelists, of course, Chris, Peg, Sam, and Gerry. We've got Women in Insurance coming up in May. We've got our first in-person event coming up in June. Mark, is there anything else you would like to wrap up with before we sign off? Sorry, you're on mute there, Mark.
There we go. Just a thank you to everyone on the panel and also to everyone who attended today in the questions. I hope you found it of value. I know I learned a lot
Me too.
on it, and this is a dynamic industry. It's changing. And I think everyone on this panel and in the state of Colorado is in the forefront of that. So it's exciting to be a part of that.
All right. Thank you. And thanks, everybody. We'll talk to you soon.
Happy
Thanks, guys.
420.
Thank you. Bye, everyone.